My name is Luben. I'm co-founder and partner at GSV Asset Management. We are a growth-focused investment firm based out of Silicon Valley, and I actually live in Paris, so I spent a lot of time here in Europe, but also spend a lot of time in the US. Yes, I need to correct you. It is the global Silicon Valley. It's not just beyond it. We believe that Silicon Valley is not anymore a physical space, but it's a mindset that's spreading around the world, which we call the global Silicon Valley, hence our name, GSV. We have several funds for both in private and public, investing in private and public companies. In the private space, we're more focused on kind of mid and late stage. We're looking at disruptive businesses, innovative businesses, people that want to create multi-billion-dollar companies, and hoping that we can see some of those here in Poland soon. So I want to talk a little bit about what it is to be an entrepreneur, what the startup ecosystem looks like, what are some trends that we're seeing around the world. So here's some statistics. Last year, there were 400,000 new businesses created in the United States, and there were 470,000 that actually failed. 8 out of 10 businesses fail within the first 18 months, and basically a business is going bankrupt every 12 minutes. 41% of venture-backed businesses fail over the last 10 years. And 6% of those got actually an exit through an IPO. So the question is, what kind of nut would start a startup nowadays? And here is a quiz. Name that nut. He lost his job in 1932. He was defeated in race for legislator in 1932. He failed again in business in 33. He had a nervous breakdown in 41. He was then defeated in race for Congress, Senate, Vice President, and Senate again. And so this nut was actually the 16th President of the United States, Abraham Lincoln. Pretty amazing story. Another case, teachers told him he was too stupid to learn anything, and he was fired from 2 of his jobs, but then ultimately he ended up creating one of the most innovative companies of his lifetime, Thomas Edison, with General Electric today being a $274 billion market cap company. Another example, he was fired by a newspaper because he lacked imagination and he had no good ideas. He launched film studios in 1920 and 1921, and both of them went bankrupt. And yet, he was one of the most creative minds of the 20th century. This was Walt Disney with Disney, which today is a $187 billion company. This is my favorite example. So this was a student doing his MBA at Yale. He wrote his thesis on a disruptive new business that has never been done before. Essentially, the idea was to create an overnight service that would deliver a package or anything everywhere around the world for just 24 to 48 hours. Again, this was not been done before. And so, to response of this paper, his professor basically told him, in order to earn a C or a better, this has to be a feasible idea. Well, he was actually able to do that after graduating. Fred Smith, the CEO of FedEx, and while he was able to launch the company in the first couple of weeks, upon launch, he kind of got to a wall similar to what many entrepreneurs get to. He was out of money, he couldn't continue operations, and so he did what probably every entrepreneur would do. He took the last $5,000 he had in his account. He went to Vegas, bet them on blackjack, and he made some money back, $27,000. With that, he was able to return the following week to operate FedEx, to continue flying, and then the rest is history. FedEx today is a $52 billion company. Another example of a great innovator of our lifetime, he was dyslexic. He was turned down by 53 banks in the UK for a business loan. And this is Richard Branson, who's the creator of the Virgin brand. he has created 8 different billion-dollar businesses to date. Pretty amazing. And then another example, this person wanted to create an insanely great computer. There was this big monopoly at his time called IBM. He wanted to disrupt that, and he wanted to essentially create a computer for everyone that can operate with joy. He was fired by as a CEO by his board, returned then successfully to Apple later. This is Steve Jobs. And probably one of the greatest things he achieved was he created computers so great that 2 years old can intuitively operate by themselves without any instructions or so. Apple today is $731 billion market cap, the largest company in the world. And this is something I always like to look at, one of the best athletes of all times. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot, and I missed that. And I felt over and over again, and that's why I succeeded. This is Michael Jordan, for me, the greatest athlete of all time. So what is the impact of a VC to the startup ecosystem and to entrepreneurs? VCs in the United States produce about 3 trillion in annual revenues. It comprises 21% of the US GDP. It makes up 90% of software jobs and 75% of biotech jobs. If you look at employment statistics, Apple, a VC-backed, one of the first great VC-backed companies, today has 76,000 employees. Intel, another example, today has 100,000 employees. It's a $145 billion market cap. Google, 54,000 employees and a $358 billion market cap. And so the question is, who was actually the first venture capitalist? Was it A, Arthur Rock, who backed Intel in 1971? Or was it Don Lucas, who backed Larry Ellison and Oracle in 1964? Or even William Draper, who was actually the first modern VC, as we know, venture capitalist? The answer is no. And there was another example way back in time, so far back to Christopher Columbus times. And it's an interesting story. So Christopher Columbus, as you all know, had this idea to get to Southeast Asia, to India and all the islands, using a new route that nobody ever went through before, instead of going through the south of Africa, going westwards. So that was the pitch, and he went out to different people to basically collect money to be able to do that trip. So he went to King John II in Portugal, and not surprisingly, got rejected. He went to see Queen Isabella in Spain, same thing, got rejected. He went back to King John II, got another rejection. He went on a roadshow through Genoa, through Venice, and then went on to meet with King Henry in England, and also with King Charles in France. And finally, it seemed like there starts to be some interest in his venture. And as he went to see King Ferdinand and Queen Isabella in Spain, he finally had a deal closed and some money. And so, in 1492, he then was basically able to take the trip. Looking at other examples where people have failed many times before they actually started their company, Reid Hoffman from LinkedIn had 25 plus rejections from venture capitalists when he first pitched the idea of this professional social network. Today, LinkedIn is a $27 billion market cap and growing. The Skype founders out of Estland, they had 30 plus rejections when they came up with this idea that you can do free calling through the internet. Ultimately, Skype disrupted a lot of the telecom companies and got acquired for $8.5 billion by Microsoft. And so back to our example with Christopher Columbus, what did the term sheet back then look like? So investors wanted a 10% of revenue from new lands in perpetuity. They wanted an option to buy 13% of any subsequent commercial venture from the new discovered territories, and they wanted also a carried interest. And so with that, here was the idea of his venture going from kind of Spain, Portugal towards Southeast Asia. But then in reality, something different happened. He hit this new land that nobody had seen before. So in that sense, this was a pivot of his startup. And if you look at present times, there's many such examples where you start a business, you have a mission, and you have a long-term goal, but how you get from A to B actually ends up being very different than what you expect. So you look at Facebook, the first time when Mark Zuckerberg was sitting in his dorm room in Harvard, he created this platform where basically users can choose between two profile pictures and say which one they like and which one they don't, called Face Mesh. Same thing with Twitter. Initially it was called Audio, and it was a different platform, basically a RSS platform. Today Twitter, totally different product. Or Pinterest, which initially was called Tote for online purchases. And by the way, Pinterest is now moving back into that category. So Vinod Khosla, one of the famous Silicon Valley venture capitalists, said, you can lose one time your money, but you can make 50 times or even 100 times your money when you end up getting a winner. And so therefore you play for the big upside. So that's why venture capital is such an interesting area to invest in. Looking at the performance of venture capital compared to different other asset groups, over the last 20 years, per year you've had 32% return versus private equity at 14% and the S&P 10%. Then looking at a shorter period of time, actually private equity has been performing better. And for the last 5 years, with a bull market in the public markets, the S&P has been actually outperforming. But over the long period of time, venture capital returns have always been the greatest. The IPO landscape, something that has changed dramatically for the last 15 years. If you look at the decade of the 1990s until the 2000s, the typical year in the US had about 406 IPOs, with the average market cap about 130 million. You fast forward to today, and what's been the case over the last 12 or so years, per year we've only had 103 IPOs per year, which is a fourth of what it used to be. Meanwhile, the average market cap has dramatically increased at 1.1 billion. At the same time, years to IPO went from 3.1 years back in 2000 to today, the average IPO being 14 years old. That has also caused VC investments to shift towards mid and later stage. In the past, it used to be more focused on Series A, Series B investments. What you're seeing most recently is companies are choosing to stay private much longer because one, they can, and two, they don't want to be public for many different reasons. Getting distracted by all the compliance things they need to do, by having to file quarterly earnings and so forth. So you've seen a lot of money getting shifted to that late stage private, which is basically expansion and later stage combined, which comprises over 60% where VC money is flowing. And today, given those trends, we call it the age of the Ubercorns. So it's not unicorns, companies of over $1 billion, but actually Ubercorns that are over $10 billion. And as we speak, we have already a couple of those just this year. Xiaomi is the largest. It's the Chinese iPhone kind of copycat that launched 4 years ago. Today, it's a $50 billion company with $10 billion of revenue and growing incredibly fast. Then obviously you have Uber, which now is a $42 billion company. Snapchat most recently raised money at $16 billion. Airbnb, which is disrupting the entire hotel industry and actually expanding that industry, is now apparently undergoing a round that's going to value it above $20 billion. Other examples, Palantir, Dropbox, we are both investors in those. Pinterest, then you have Flipkart, the e-commerce site in India. You have SpaceX, Elon Musk's kind of one of three childs. And then DJI, which is the drone maker, also out of China, that's now also above 10 billion market value. So what is necessary? Basically, what's necessary to create those billion-dollar companies is an ecosystem. And if you look at a previous example of an ecosystem, you had Detroit, 100 years ago, was the epicenter for innovation in the world. That's where Ford was started. That's where all the talented people tried to move to, and that was the hottest place to be in. 100 years ago, you look at Detroit today, and it's basically a totally different picture. None of this exists. You look at Silicon Valley 100 years ago, and there was basically nothing there. A lot of nature, very few people lived there. You couldn't tell that, fast forward 100 years ago, it will be the epicenter for technology, innovation, and where, the most important businesses are coming from. So the venture capital circle of life essentially needs 1, human capital, 2, investment capital, and 3, entrepreneurs and innovators. And if you look at Silicon Valley, what it has, initially it had Stanford, which was very research focused, which started to create these talented people. Then you had Cal Berkeley, which came also to the equation. So you had a pool of very talented people, open-minded. Then you started to have also venture capitalists in the 50s and 60s, and some of the most important firms, Kleiner Perkins, Sequoia, Benchmark. And then ultimately, with this combination, you start to have this ecosystem that produces the companies like Silicon Valley has been able to produce. In the new model, what we call the global Silicon Valley, is locations are starting to realize this formula and are starting to replicate it. You're starting to see the same thing happening in Sweden, in the Nordics, in London, in Paris, hopefully here in Warsaw. You also start to see that in Beijing, in Sao Paulo, in different places around the world. There is money going into research and into education. Then there is venture capitalists starting to be interested in what's going on, and you're certainly starting to see businesses getting created that very quickly become billion-dollar businesses. Spotify, great example how it began the entire revolution in Sweden. Zendesk, company out of Denmark that is now public. Mobileye, which is providing technology for driverless cars, which is out of Israel but based in the Netherlands. And then very impressively, just over the last year and a half, you've had multiple Uber-like copycats arising in different places around the world that have become billion-dollar businesses. For example, Ola Cabs in India, Grab Taxi in Southeast Asia, Didi and Kuaidi Dash in China. They actually merged a couple of months ago and now are valued at $15 billion. And then obviously you have Lyft, which is in the United States and competing against Uber directly. So if you look at risk appetite around the world, that's also something that's changing. Traditionally, if you looked at risk, you had a great idea, you went to pitch it to investors. If you went to London, people will typically tell you, well, risk is not really my cup of tea. Then you moved further west to New York, to Wall Street, and you pitch the same idea, and people would say, well, if it's such a good idea, why hasn't it already been done before? You move further west, you go to Minneapolis, where a lot of the biotech companies are from, and the same idea, people will look at it and say, well, it's promising, let's test it. And then finally you move to further west to San Francisco, and investors are like, okay, I'll write you a check. What we're seeing today, however, it's interesting because same thing, you move even further west across the ocean, you go to Shanghai, and then people are like, great idea, now it's my idea. So that's kind of a dynamic that we're seeing, risk, people are starting to become more risk adaptive and seeing how innovation is transforming industries and how quickly companies are growing, they start to be more adaptive towards risk. Some of the long-term fundamentals for companies are, one, there's obviously earnings growth is the engine over the long term for value creation. Or as Peter Lynch famously said, people might bet on the hourly wiggles of the market, but it's the earnings that woggle the wiggle long term. Another trend and fundamental is that today we're living in exponential times. Every morning you wake up and there is a new company created on top of the company that was created a couple of months ago, and we're constantly adjusting to change, essentially. You look at global internet users, it's gone from 1 billion users in 2005 to now over 3 billion today. Mobile surpassed PC earlier in this decade. There are 1.8 billion smartphones and expected to hit 4 billion by the end of this decade. You look at Android and iOS downloads, today at about 140 to 180 billion, expected to increase to 270 billion in the next 3 years. The cost of computing over the last 15 years or so has gone essentially to zero. Same thing with cost of storage. Today it's essentially zero. If you apply those dynamics to a car purchased in 1990, it would basically be free today and you would be throwing it away after every ride. You look at disruptive new models with freemium formulas. So you had IBM, which was kind of the disruptive model in the 90s. So Salesforce was in the 2000s. Today you have models like a Dropbox for file sharing. Or you have Spotify for music on demand everywhere. Basically, you get all your music you want wherever you are at any time. You have disruptive new models in the peer-to-peer sharing economy. Airbnb, as I said, very popular, disrupting a lot of the hotel chains. Lyft, which we're an investor in, doing very well in the US and gaining market share against Uber. Lending Club, which is disrupting the banking industry, basically peer-to-peer money lending. And then powerful new models in the mobile space. Snapchat, it's increasingly becoming the place, the app that teenagers and young adults communicate with each other. We say kids don't text each other anymore, they just Snapchat. Tinder has become the leader in the online dating space with very high growth. And Slack is an app that's disrupting emailing. All the Silicon Valley startups are now using Slack instead of email, as it is much more efficient. It increases productivity and it eliminates this problem with spam. So the modern civilization formula, as we call it, what do you need for that? One, there's hyperconnectivity, which we are all hyperconnected to everybody in the world, essentially. You look at Facebook by itself is now the largest company in the world, the largest country in the world, if it was a country, with $1.44 billion. They just surpassed China. You look at Twitter, it has become the ecosystem where news is flowing and where essentially everything gets reported. Users are sending over 500 million tweets per day. You look at YouTube, over 1 billion viewers watching 6 billion hours every month. WhatsApp has disrupted a lot of telecommunication companies by eliminating the stupid charges for SMS. WhatsApp users now send 30 billion WhatsApp messages per day, which is already twice what is the global SMS volume. Snapchat users are viewing over 1 billion stories every day, and that's growing very, very fast. And so the second part of the formula is one was this hyperconnectivity, two is drive for progress. If you look at the global population, we've seen a remarkable shift from the lower class to the middle class over the last 10, 15 years, and that's just expected to continue to increase, going from an estimated 3.2 billion in 2020 to about 4.9 billion in 2030. And a company that we're an investor in, Coursera, is actually on the forefront of that move. Coursera, for those of you who don't know, is an online platform where users can take courses from over 120 universities, basically for free. And not only that, but if you choose to actually get credits for courses that you want to create your own degree, so to say, you end up paying $50 per course, which is, just a very small portion of the cost that you would be paying in the university. Most recently, Coursera announced an IMBA program together with the University of Illinois. And this IMBA program is truly revolutionary in that it is fully online, so you don't have to be in Chicago or in Illinois in order to take that. You can be anywhere around the world. It costs about a third of the cost that you would get when you are on campus, and it counts fully as an MBA that you would have taken on campus upon completion. So very revolutionary, and we believe that there's going to be a trend where you see more and more of that coming to Coursera. Another example, the combination between Tesla and SolarCity, both of Elon Musk's companies. SolarCity, as you know, is an installer of solar panels. So with the most recent announcement of Tesla, you could actually have SolarCity panels on your rooftop and a Tesla battery in the house, and you're totally energy independent for life. So basically, you get the solar energy stored, and you can use it whenever the sun is not shining or during the night. So the equation for the connected world, you have hyperconnectivity, you have drive for progress, and then you add to that true ideas and good values, and you get to, global sustainability and prosperity, and that should be the goal for every entrepreneur and every startup. And with that, an example of that was the Ice Bucket Challenge phenomenon last year, which essentially was all these three things combined. On the flip side, if you add, instead of good values and good ideas, false ideas and bad values, you get extremism and global dysfunction, which unfortunately is the case with the ISIS, which is going viral. So there's three ways to drive change. And first, when you're a startup and an entrepreneur who wants to change things and you want to create a great company, one, you have to have obviously a mission, a long-term idea where you want to go to. Two, you have to have incentives, rewards once you hit milestones and so forth. And three, you have to be inspired. And those three values together are necessary for creating the greatest startups that will keep on improving our civilization. And with that, I hope I inspired you, and I'm open for any questions. Thank you.
Thank you very much. I'm actually I'm a student at Coursera, so thank you for that. So, any questions, guys? Oops. Really? Do we need to go through this again? Come on, someone. You have someone very interesting here, investor who is raising money or wants to raise money or wants to move to the Valley. You should definitely ask him. Questions? Really? No one? I'll ask you something. So there's a lot of discussion on, despite the structure of what would be powerful to drive innovation, there's still a lot of stupid things coming out from the Valley. So the question is, what are we missing there? Why is the echo chamber in the Valley not allowing to create truly disruptive? And I saw that you were mentioning Bino Koshlar. I'm a very, very fan of him because he's one of the few investors that's investing on a 10 to 15 year horizon to do things that are truly groundbreaking that actually require time. So why do you think that is, and how can we solve that? to do things that truly impact humanity?
Yeah, I mean, the way it works is in order to get to those, you will always need to have, you know, a big chunk of kind of
Shit.
stupid ideas and things that, you know, seem interesting, that are kind of blown up, and, you know, people were kind of crazy chasing those and putting money into, you know, that fell. And it is the nature of startups and of venture capitalists that, you know, the majority of things that they do will be failed investments. And many of those venture capitalists, especially the early stage ones, they know that, and they have the mindset that they go into, you know, meetings and they know they have to make 100 investments, because out of those 100, 10 maybe will work and one will be the mega winner. With that mindset, you know, you have obviously entrepreneurs trying to create whatever it is. You know, many times it's, yeah, as you say, stupid ideas, and they're able to raise money, but that's just how the entire ecosystem works. And once you have the scale of Silicon Valley, that's where you get to. That's why I'm extremely impressed by Scandinavia, because if you look at Scandinavia and the Nordics, you actually have a very high hit rate of successful businesses.
And a low demographic.
Exactly.
Yeah, they do have a lot of snow though, so there's nothing else to do. Any questions? No questions? Okay, then I'll do another question. No, don't leave the stage. Extra question for bonus points. So you said you're based in Paris.
Yeah.
But you also operate in the Valley. So how do you see Europe compare? Do you see, and I won't use the word Silicon Valley because I don't believe in replicating Silicon Valley, but do you see, specifically Paris actually is a very, very active city right now in terms of investment and very interesting things happening there. So do you see a new hub or a new place in Europe where, you know, new innovation can be pushed and then cool things are happening basically?
Yeah, as I mentioned, Scandinavia, I think Paris is interesting because you have some of the best universities in the world, and you actually have a lot of talented students wanting to create something, more and more so because of, you know, of the political reasons and the way the political structure works. You know, nobody really wants to go to work in a bank or, you know, consulting company these days, or at least the people I know. So there's a lot of enthusiasm and motivation to start companies. I think you're lacking a little bit from the investor side. You're lacking, you know, too much supply, but that is probably changing. A lot of the large VC firms out of the US are starting to focus more and more on Europe. You know, London is obviously big, and there's a lot of available capital. That's an interesting space. Berlin is another place which, you know, unfortunately doesn't have too much innovation going on, but has some capital.
Innovation is happening here in Poland, actually.
Yeah, that's a great trend. Israel is also very interesting because you have so many great software startups. So they're spread apart, you know, the places of activity, and it's interesting to observe that.
Okay. One final chance to ask a question? No one? Okay. Luben, thank you very, very much, guys. Please thank him for a fantastic talk. I love the amount of data you displayed. I love data.